In the high-stakes world of global finance, where every decision ripples across continents, one move by Beijing has sent shockwaves through Washington. In what analysts are calling a calculated counterstrike, China has begun dumping massive amounts of U.S. Treasuries, signaling that the world's second-largest economy is no longer willing to bankroll America's mounting debt. The move comes after months of escalating trade tensions. And according to financial experts, it could be one of the most powerful weapons China has ever used against the United States. Reports from Bloomberg and Reuters confirm that Beijing has sold off over $40 billion in U.S. Treasury bonds in just a matter of weeks, its largest reduction in more than 4 years. This quiet but deliberate liquidation of American debt is not random. It's strategic. China holds nearly $800 billion in U.S. Treasuries, making it one of the biggest foreign creditors to the United States. By cutting its holdings, Beijing is sending a message directly to Washington. The era of economic intimidation is over. Economists at the Brookings Institution explain that for years, U.S. policymakers relied on China's massive Treasury purchases to stabilize America's budget deficits and support the dollar. But that balance has now fractured. As China offloads bonds, U.S. borrowing costs are spiking. Yields on 10-year Treasuries, the benchmark for global interest rates, have jumped to their highest point since 2007. Wall Street is reeling, and the ripple effects are spreading fast. According to the Wall Street Journal, the sell-off began shortly after Trump's latest round of tariffs targeting Chinese technology and steel exports. In response, Beijing executed what one strategist described as financial judo, using America's own debt as a pressure point. By withdrawing from the Treasury market, China is undermining the foundation of U.S. fiscal stability, forcing the White House to confront a threat it can't easily sanction or negotiate away. Inside Washington, alarm bells are ringing. Treasury officials warn that if China continues this pace of liquidation, the U.S. could face a liquidity crisis, a scenario where global investors lose confidence in America's ability to manage its own debt. It's the financial equivalent of cutting oxygen to the system, one former Federal Reserve advisor told Politico. For Donald Trump, the timing couldn't be worse. His administration's strategy of economic extortion, using tariffs and trade bans to pressure Beijing, has backfired spectacularly. China isn't just retaliating through trade, it's hitting America where it hurts most: its debt markets. The result is a slow, silent squeeze that threatens to destabilize everything from the U.S. dollar's dominance to domestic credit markets. In the corridors of power, there's growing realization that this isn't a typical trade war anymore. It's a financial siege, waged through spreadsheets, not soldiers, and it's one the United States may not be fully prepared to win. As China's sell-off of U.S. Treasuries accelerates, panic is starting to seep into Washington's financial core. The invisible weapon Beijing has unleashed is now shaking the very foundation of America's economic power: its debt-fueled stability. Within days of the sell-off, the U.S. bond market began to show signs of stress. Yields surged, the dollar weakened, and Wall Street traders described the situation as a silent earthquake. According to Bloomberg Economics, every $10 billion reduction in Chinese Treasury holdings increases America's borrowing costs by up to 5 basis points. That might sound small, but on a federal debt exceeding $35 trillion, the implications are staggering. The U.S. Treasury now faces billions in additional interest payments, money that could have funded domestic programs, infrastructure, or defense. Instead, it's being swallowed by the rising cost of sustaining debt. In interviews with the Financial Times, several senior analysts said Beijing's strategy is both elegant and devastating. By selling U.S. bonds in controlled waves, China can weaken the dollar without crashing the global market, ensuring maximum pressure on Washington with minimal damage to itself. This tactic also forces the Federal Reserve into an impossible position: raise interest rates to stabilize the currency or cut them to protect the stock market. Either move risks deepening America's vulnerability. Inside the White House, the mood is tense. Sources close to the administration reveal that President Trump has held a series of emergency meetings with Treasury Secretary and Federal Reserve officials. Leaked memos suggest Trump demanded immediate countermeasures, including potential sanctions on Chinese financial entities and the exploration of limits on foreign Treasury ownership. But experts warn that such measures could backfire, pushing other nations to follow China's lead and diversify away from the dollar entirely. Meanwhile, markets are reacting violently. The Dow Jones and S&P 500 have both recorded their steepest one-day losses in over a year, while gold prices are soaring, a classic indicator of investor fear. Major U.S. corporations with heavy debt exposure are also feeling the strain. As borrowing costs rise, refinancing becomes harder, threatening a wave of corporate bankruptcies if conditions persist. For rural America, the impact is indirect but painful. Higher interest rates mean costlier farm loans, shrinking profits, and a tightening credit environment. What started as a geopolitical chess move is now turning into a domestic economic chokehold. It's not just about China selling bonds, one economist told CNBC. It's about the world rethinking its trust in U.S. debt. That's the real danger. Politically, the pressure on Trump is mounting. Critics accuse him of overplaying his hand, using economic threats without understanding their long-term consequences. His base, particularly business leaders and farmers, are growing uneasy as the financial fallout expands. Yet in public speeches, Trump maintains his defiance, claiming that America will never bow to China's manipulation. But behind closed doors, even his advisors acknowledge the truth. China's latest move has rewritten the rules of economic warfare. For the first time in decades, the United States is being forced to confront a world where its greatest weapon, the dollar, is being turned against it. By winter, the impact of China's Treasury selloff had spilled far beyond U.S. borders. What started as a calculated financial maneuver has now become a global shock to the system. Economists at the International Monetary Fund warn that Beijing's continued liquidation of U.S. debt could fundamentally reshape the international monetary order. The message from China is clear. It no longer intends to play by Washington's rules. In Europe, financial markets are already responding. Central banks in Germany, France, and Italy have quietly begun diversifying their reserves, reducing exposure to U.S. bonds and increasing holdings in gold, the euro, and even Chinese yuan-denominated assets. The Financial Times reports that over a dozen nations, including Saudi Arabia and Brazil, are considering similar moves. The global trend is unmistakable. Faith in the U.S. dollar as the world's safe haven is beginning to crack. For decades, America's dominance rested on one silent advantage: the ability to print debt that the world would eagerly buy. But China's actions have exposed that illusion. By slowly withdrawing from the U.S. Treasury market, Beijing is not just defending itself, it's challenging the very foundation of American economic supremacy. As one analyst at Oxford Economics noted, the era of uncontested dollar power is ending, not with a crash, but with a quiet shift eastward. Inside Washington, political tensions are reaching a boiling point. Trump's opponents accuse his administration of provoking an unnecessary economic confrontation that has backfired spectacularly. Hearings in Congress are growing heated, with lawmakers demanding accountability for the policy failures that allowed America's most powerful rival to weaponize its debt holdings. Even traditional U.S. allies are beginning to distance themselves. Japan and South Korea, both major treasury holders, are hedging their positions, fearing they may become collateral in a financial war that shows no sign of slowing down. Meanwhile, Beijing is celebrating a diplomatic victory. Chinese state media openly describes the sell-off as the end of American coercion through finance. For Trump, the optics are devastating. His strategy of economic pressure, once touted as a show of strength, now appears to have accelerated America's financial vulnerability. Markets remain volatile, the dollar is under pressure, and the world is watching, wondering if the U.S. can adapt to a new reality where financial power no longer flows solely through Washington. If history remembers this moment, it may not be as the peak of American dominance, but as the turning point. The day China proved that even the world's most powerful economy can be shaken without a single shot being fired.